Good morning, guys. How are we all doing? Happy Monday, everybody. Welcome to the new trading week. I am Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go over to these Bitcoin 4-hour charts. So Bitcoin on the 4-hour, we have found ourselves back down here at the bottom of this range, this area that we have been, we've been trying to hold for a while, kept on losing it, did manage to break fully into it and above, but have obviously subsequently broken back down, and we are now basically at the bottom. So this is clearly an area that Bitcoin has to hold. We have to hold this level. Basically, the lower part is 41,000. We have to hold this support, turn this back around, try and get back to the top and get back above here. Otherwise, it is clearly going to look pretty bearish, with for sure targets down to about 30,000. About 30,000, and then clearly that's not that would be problematic down there if we were to test down there, because if we test down there, we've clearly got a chance of breaking below there. But yeah, first things first, so we can get supported here. If not, we do have another. We have obviously various levels of supports that could ultimately turn the tide of a downward move. But yeah, here is like the last bullish line in the sand, because obviously this is the highest sideways range that we have spent much time in recently. So we need to maintain that range and ultimately break up to the next one, not lose that and then start trading the lower ranges, because then clearly we'll be looking at a downtrend obviously on the medium term. So yeah, things aren't looking too good, but what I would say is, honestly, to see Bitcoin currently over 42,000 in the face of what is going on in the rest of the world's markets, it actually is catching a bid from somewhere, and that is obviously, in my opinion, obviously the bid because of the weaponization of the current fiat system. So people are just thinking we've got to allocate something to crypto, and people in certain countries are allocating a lot to crypto because that's how they can continue to transact and move money across borders, which is obviously one of the great use cases for cryptocurrency. Let's go and look at where a lot of the problems are. This is just a ridiculously aggressive move in the bond market. Also, it is what you could look at as like that last J hook blow off top. So we could see obviously at some point this having a severe pullback. The only problem is that this going up is bad, but the only way this is realistically going to get a big pullback is if risk markets basically I wouldn't say the word collapse, but have a severe pullback. So it is basically a rock in a hard place. We need this to stop going up, but this is only, otherwise it's going to ruin markets, and the only way it's going to stop going up is if markets are basically ruined. So we are not looking too good here, is all I can say. Clearly the dollar also up there, traded over 100, hovering around the area. Not good for risk assets, not good for anyone really. It is not even particularly good for people in the US, so because they are obviously heavily exposed to the markets and risk assets, so there would be a negative wealth effect obviously if and stroke when risk assets have a severe pullback. Oil also reflecting what is probably a weaker global economy now. It obviously had a big massive run up. This is kind of what I'm saying with the bond market, with that 10-year yield. It had that last big pump up, was practically the top, and then had to have a serious pullback. I mean, it is very similar looking, minus obviously the pullback part, which has not happened yet, but it will happen. But the problem is, it won't happen. It won't be good. It just won't be good when it happens, basically, because not because the yield coming down isn't good for markets. It's the reason that it will be coming down, and that won't be good. That is not basically good for markets. So yeah, tough times. Gold catching, well, you could say catching a little bit of a bid, at least at the top part of its relative sideways range that it's got. So this could break onwards and upwards. particularly could do if this yield collapses. I mean, let's face it, gold moves on real yields, not nominal yields. Real yields are still negative and getting more negative as inflation is accelerating. But also that inflation, I think, has practically topped out. It will take a while to filter through to the figures, and also obviously the it's done on a 12-month rolling basis, so clearly that will help to decelerate inflation. So we'll have decreasing inflation. So yeah, that will potentially just at least put some lipstick on the pig. But yeah, things are still looking particularly tough as markets are reflecting. But yeah, like I said, a lot of it is shown in this move, in this one of the most aggressive moves of recent history in the bond market, and then yeah, that has to pull back, and then when that pulls back, it's not likely to pull back in a benign environment for risk assets. So yes, lots of trouble here. Let's have a look at Ethereum USD. Ethereum USD. We'll look at that first, scene as we're here. You can see Ethereum USD is not looking. Has not pulled back quite as much on a relative basis as Bitcoin. Not looking too bad. Got to hold this level here. If we actually look at on the Satoshi parent, you can kind of see why it is moving. It is obviously moving up against Bitcoin, which is basically what this chart is. Yeah, you can see we're getting up into this testing. We are properly testing the resistance area. It really does look like it wants to get above it, but it's got to obviously break up and make that move, because if it just spends too much longer floundering sideways here, it will obviously most likely come down and test some downside. Let's look at the Bitcoin dominance as well. It's showing a similar thing. We'll just extend this along now, seeing as we are at this part of the chart. Is having a bounce, is still flirting with this support area, and like I said, it's got to break below it and continue, because if it doesn't, it will just probably put in a low here and then test some upside. So yes, what else do we want to have a look at on here? Nascoin clearly struggling. Like this line's been on here for a while, literally a perfect rejection of it and then coming back down. But yeah, this is not looking good. I mean, it's kind of again at an area needs to support. We are basically at an inflection point. So I think this week could be pretty critical for the direction of markets. We could certainly do with some good news. We could certainly do some good news, hold this level and turn back up. Like I said, there's the potential for a nice sweet spot in the markets up and towards the end of Q2. So we kind of need to turn up and then yeah, start enjoying that sweet spot before things before basically the growth figures will start to noticeably slow, and then the markets will start to have to digest that information. So yes, let's look at stochastics. How are they doing? 4 hour, I don't think it's particularly looking good here. Yeah, just about turning up here. But you can see it is floundering around this level. 10 hour, let's have a look at the 10 hour when it decides to load. Yeah, 10 hour turning up from a low level. So yeah, that could obviously help us get a bit of a bounce here. 12 hour looking to try to turn up from a low level. Also, daily still diving, but ultimately it's going to struggle to maintain this downward momentum over the next couple of days. So we'll potentially turn up from a low level. 2 day coming down towards that trend line. 3 day pointing down from obviously a high level. 5 day looking to turn back down. Weekly looking good though, and bi-weekly not looking bad. And there's the monthly for sake of completion, but you can see how much data we've got there. But yeah, overall we do need these this 10-12 round daily to turn around, get us moving, get us back to the top end of this range, 47,000. And then yeah, I mean, if we do look at these a lot of these recent high areas around here, you could kind of look at an area of between 44 and 45,000 as well. I think we did speak about this area, this area, but we didn't want to draw it in because it just was too many shaded in boxes, and this is the main range. But yeah, above that 44, 45 top half of it, then yeah, we should see the move up towards the top half of the wider range, the $47,000 level. But obviously, first things first, we have to get supported here and get back up there, and then not get rejected at that level, at that $45,000 level. A rejection there and then turn back down would look particularly bearish, and you would be you would struggle not to see a lot of selling into that rejection and then coming back down to support at that point. So yeah, tough times. This yeah, it's just tough times. I would like what I want to say is that this massive move up in the bond market kind of bait, and that's going to help markets. But like I said, I think the only reason this does slow down and reverse, even for a medium time frame trend, is if we see a severe deterioration in risk assets, obviously of which Bitcoin is one of the riskiest of risk assets. Crypto as a whole is one of the riskiest of risk assets, and that would certainly be coming down in that environment. So yeah, rock and a hard place, immovable object, unstoppable force, all those sort of analogies. It is tough. It is tough out there. So yeah, thanks for listening, guys. Remember, this is not a financial advice. We're not a financial advisor. Always do your own research, and I shall speak to you guys soon.